I appreciate everybody joining us today. I know you've had a long day already of presentations and you've got some more to go here. So I'm sure a lot of you are on a little bit of overload, and I'm going to try to jump right in here and not keep us too long. Let me just open up our chat. Okay, perfect. All right, so welcome. And as always, let's go ahead and get our disclosures knocked out here. Trading involves risk. Make sure you know what you're doing before you do it. And my name is John Skelton, and as Pat mentioned, I'm head of operations with Apex Investing. Apex, we're an online trading community. We're an educator. We have our own indicators, systems, live trade rooms. We have mentor groups. I'm not going to sit here and go on and on and on and bore you. I know we're all hitting that lunchtime lull and had a lot of info already. I'm going to kind of jump right into what I want to show you here. I've got a lot to cover. Okay, it's kind of going to be a jet tour. You're going to be a little overwhelmed because I want to show you more than one. I want to share with you, more than one strategy that I use for Nadex. Okay, during volatility, and I want to also show you a free tool that I want to give you, but. So I'm not going to have a lot of time on each little strategy here to jump in and answer a lot of questions and go through it in detail, but I want to show you a few different ones. You can kind of see, which one kind of stands out to you most or meets your trading needs, and I'll give you information where you can go and get some more in-depth information on each one, okay? Now, I am going to assume that you already know the basics, all right? So today we're not going to spend time on what is a binary, how it works, what is a spread, how does it work, what is what used to be called touch brackets, now called knockouts, how they work. So if any of this is over your head, please forgive me, but there's several places I can send you to here to get those basics. We're going to assume that you have those so we can jump right in, and I'll show you where to get more. So kind of the theme of today's event is about volatile markets and how we trade during these volatile markets. And I echo what Brian said a few minutes ago. I love trading Nadex during volatile markets because you've got capped risk, you have known risk, upfront known risk. You know exactly what you're risking before you get into a trade. There's basically a built-in stop there with that capped risk, whether you're trading a binary, whether you're trading a spread or, a knockout. You have limited capped risk, you have, limited profit potential. You know exactly what you're doing there. And there's a lot of options available. You got a lot of different strikes, you got a lot of different expirations to fit around your particular strategy or system. So especially in these, zippy markets, and with the smaller account, is another thing Brian mentioned as well, market zipping against you just because you have a stop on a, futures or Forex platform doesn't mean the market can't blow right through it. But, with Nadex, you have those set stops, great for new traders, great for traders with smaller account size. You can trade in volatility, you can trade directionally. You can also do straddles or strangles and go both ways. And I'm going to show you a little more about that. And like I said, I want to give you a free tool that I use and review a few strategies. I'm going to keep an eye out on the markets while we're on the webinar here. And if a trade sets up, I'd like to take a trade with you live. I was, Dan Cook started the day off here, and, him and I were talking a little while ago. I sent him a trade that I was in with Nadex from a little earlier here. And I was like, man, I wish this would have set up live, at 2 o'clock when I'm doing my presentation, but I'll keep an eye out. But this was a live trade I had from earlier today that I took, and I want to show you what I did to take this trade, okay? This was on the US Tech 100, which is the NASDAQ. I did the knockouts, okay, and I did 10 contracts. At the time of the screenshot, it was up about $530 in profit, okay? Went a little further than that, but I got out here right after the screenshot because I had to jump over here and finish preparing this presentation here. But I want to show you that, okay? And I want to show you something from today. All right, I want you to see that what I'm trying to show you works now, works today, works in volatile markets. And if something else sets up while we're on here, we're going to take it. So what was this trade earlier? I think I got in this trade around right at 12, just a little bit after 12 noon. okay? Like I said, 10 contracts short for the knockouts, up about 530 at this point. So I want to show you, let me bring over a chart here, okay? And we're going to reference this chart several times, okay? Real quick overview of this chart. What this chart is, if you notice up here, this is on the NASDAQ. This is what it's a 50-50 tick chart. Okay, now these are special proprietary bars made by Apex. They're called continuum bars. In a nutshell, real quick, each one of these bars is 50 ticks. Okay, so at the close of this bar right here, the market either has to go up 50 ticks to make a new up close bar, or it's got to go down 50 ticks to make a new down close bar. And I can adjust these. I can make them 10, 50, 100, whatever I want. I just happen to have them on 50 and 50 right now on the NASDAQ, okay, just because it is very volatile and it moves a lot, okay? So that's what these are, 50 and 50. Notice right here where this, this bar closes up, okay, and that means the market went up 50 ticks. Then it started to go up a little more, see that wick, but then right here, came back down, went down 50 ticks from the close of this bar. Point is, you see an up, you see a down, you see an up, you see a down, you see an up. Basically, that was a lot of congestion right there within a 50-tick chop period. But this one particular trade, because I want to show you a few different examples. I'm also going to assume that most of you on this webinar understand what divergence is, okay? Notice down here, this indicator called VAD-A Live. This is volume accumulation and distribution. It measures momentum, measures some volume. So notice right here in this push up, okay, see where it is here? That was this push up to right here. Now we see that the market went up even a little bit higher, right? So it made a higher high, but notice this push of volume is lower. So the market went further, went higher on less volume. Now we notice that it went up even again higher. You see that? So it made another high, but again on less volume. So it's what we call a double divergence, right? The market was divergent here, and then it was divergent again, okay? So right there at that point is when I started looking for a short trade, okay? Right in here to go short. Now you might say, well, John, that's cool and all, but that's not a very big move short. That's just like 2 bars. Yes, granted, but remember, how big are these bars? These are 50-tick bars. Just those 2 bars alone right there were 100 ticks, plus the rest of this wick, about another, 25. It's about 125 tick move. I don't know about you, but that's not something to, cast aside, right? I mean, that's a nice move, okay? So that was one of my first keys as I was looking at this trade here. I was also looking at the fact that the market was coming close to, the all-time high that was recently just set. And as it was coming into that high, I'm seeing double divergences, okay? That it's losing some steam coming into those, okay? Now, from there, okay, give me one second here. I flipped over to look at this other chart, okay? Now, this is a special 30-tick Apex chart, okay? You notice off to the side here, I have some order prints. A lot of y'all are familiar with order flow, where it's just a bunch of numbers, right? Buy side and the sell side and what contracts were bought and sold. Order flow by itself can be very confusing. It's just a bunch of numbers. What do you do with it? Well, if you've heard any of our, webinars before, Apex, we've gone in and, we've put, algorithms to help us interpret this order flow, okay? And you can kind of see some of those on this chart over here. Like, for example, see this purple line and see this purple line and this green line, and, those are zones of interest. Well, for example, that green line right there, that's a block order. This orange line run under, that's a block order, a big, huge set of orders that have come in. And that's interpreted based on these numbers, okay? See this white line right here? Called a mini magnet, it's price rejection, okay? So there's a lot of ways we interpret that. But notice up here, see this red box? It's what we call an exhaustion box, okay? Where as the market was pushing up right here on this particular chart, okay, we see this lightning bolt here. We see this last kind of push right here on this up close bar. And then at the top of this bar, which is represented here, we've got exhaustion, okay? Also, if you notice, it's coming right up to this green line, okay, which is part of our ICE indicator, a volume indicator, okay? It's a level. So the point being is this, and again, I'm not going to get all, don't want to confuse you here. I'll show you where you can get more info on this. So on a big chart, I see double divergence. That's a big tell. Divergence alone is great. Double divergence is even better, right? Higher probability, especially that being on a big chart. So I've got double divergence happening on a big chart. When I look over at a 30-tick chart here, I see the market getting exhausted coming into a level here, okay? All right, and then I can look down at some other charts as well, and that was my cue to go short, okay? Now, so this is where I went short here, okay? Are you on, let me pull up that screen again here for this trade here that we were just looking at, okay? Right here. And I went short 10 contracts with the knockouts, and at the time of this screenshot, the market was right here about 402. We were up 530 bucks, okay? Now, so I got out right about here, okay? So I took it short and I got out right about here because I did see the market starting to make a little pullback here and I had to go. Now, one other key thing here with the Apex order prints that create these zones. These zones are kind of hidden. You don't see these on a regular naked bar chart. But you see right in here, see this yellow color here? That's a cluster. It's a cluster of orders. And then see this green? Like I said, that's a block order. This is a block order. See this green right here? That's a zone of interest. And see this white right here? That's a reject. If you add all these together right here, can you see how that kind of just makes a big wall? It's like a line of bricks, a line of bricks, a line of bricks. Does that make sense? Where they're all stacking up together there? So if I was taking this trade short, where would be my target? Like my longer term target. Maybe I just want to scalp it and get 10, 20, 30 ticks out of it. But if I want to go all the way, I can see from this chart, I've got a few levels in the way here, but where's my big level? Where's my big support or resistance level? Where's my big level behind the scenes from order flow that everything's just stacking up? It's kind of really clear to see that. And where did the market go? It came down. Yeah, I pulled back against you a little bit, but where did it come to, like to the tick? Right into that brick wall before it reversed. So that was that trade there that I took. That was why I took it. That is where I went short. And that would ultimately been my target. Okay. I got out around here for a little over 500 bucks. Taking it down here, might have been a nice $750 trade there with 10 contracts with Nadex on the knockouts. Okay. So just a quick explanation there. I wanted to show you a trade from today and why I took it and what the thought was behind it. Okay. Because one of the other things is, I mean, let's look at something. I'm going to pull over a little like 6-tick chart. Here's today on a 6-tick chart on the NASDAQ. And I say today, this is just from like 11 o'clock until now. I mean, do you see all this? I mean, it's a lot. Okay. When the markets are really volatile and you're using smaller bars, it can be very whippy. It can be very zippy. And what are you doing, right? Where is it going? So when the markets are really volatile and I'm looking for a good sized trade on Nadex, I mean, I could use this chart if I'm trying to get a little scalp on something, right? But with Nadex, if I'm looking for a little bit bigger trade, that's part of the reason why I do like to see, you know, what's going on a larger chart, okay? Because it kind of takes some of the noise out of it on, these really big volatile days. So let's talk a little bit about this chart here again, okay? This 50-50 continuum chart. So I showed you that particular trade setup that I took today. But one of my favorite ways to trade volatile markets, especially to trade Nadex in volatile markets, is to look for breakouts, okay? To look for accumulation and distribution. I always call it the kink and the burst, okay? Some of you might have heard me teach on this before. Think back to when you were a kid and you're playing outside, in the backyard with the water hose, right? And you turn on the water hose, you're spraying your brother and sister down, and they go and hide far away, think you can't get them. What do? You have the water hose on and you kink the hose, right? And all the pressure builds up, the hose gets big, and then what happens when you build that pressure up and then release it? It just breaks out, right? And it shoots off. And looking back, I really wish when I first started trading years ago that someone would have taught me this simple concept of kink and burst. Now, I know a lot of you look for chop, in different ways. I mean, some of you use here's a 5-minute chart. And you're like, well, I mean, I can look and I can say, okay, this is, that's some chop there. Sure. Okay, well, maybe a little bit in here, or maybe you look for wicks and, well, is this chop and this, and that might be a little chop there, maybe a little here, whatever. Okay, whatever you use to look for chop or look for consolidation zones for breakouts, that's fine, okay? But with these Apex proprietary bars, these shadow bars, especially using these larger sizes, can you guys already see the chop? I mean, without me really having to teach you how. I mean, what do you think's going on right here? See this? You got an up close bar, a down close bar, an up close bar, a down close bar, an up close bar. You see that? It's just, it's making like a wall there, right? Is that pretty easy to spot that? Okay. Now, I personally, I'm not looking for just 2 bars and up and down, or even just 3 up, down, up. I mean, the 4 is okay. I really like to see 5 bars, sometimes even more. Okay. Now, I'm not saying there's not trades on 4 bars. I mean, look what happened right here. You see this 4 bars of chop earlier, today. That was right around the open. That's clearly a range. That's clearly a kink in the hose. And then what happens? A burst. Well, and look at this. That's a 50 tick bar. That's a 50 tick bar, 50 tick bar, 50. That's 200 ticks earlier today. You see that? What about here at around 10 o'clock? 1, 2, 3, 4, 5 bars of chop. And when it breaks out, goes up 100 ticks, pulls back down, then goes up, 100, 150, 200, pulls back. These are some big moves, okay? So one of my favorite ways to trade Nadex in these volatile markets is to look for those. I mean, those couple there were just today. If you're trading overnight, here's one. Let's look back at yesterday in the afternoon. Okay, let's just see what we see. 1, 2, 3, 4. There's a chop box, right? Okay. We got a breakout of 50 ticks, 100 ticks, and almost another 50, about 130 tick breakout there. Okay. What about this one, about 10 something yesterday? You see it chopping up, and then boom, 100 tick breakout. Okay. Now I'm going to show you a couple different ways to trade these. I just want to help you identify them and see them and show you how I do it. What about the day before, right around lunchtime? Is that pretty clear? 1, 2, 3, 4, 5, 7 bars there in a 50 tick range. And when that's a kink in the hose, right? The power's on, the momentum's there, we kink it up, and then we burst out. 50, 100, 150, 200, a little over 200 ticks. Okay. I mean, if you're trading binaries, that's a nice move. Out of the money binaries, that's a nice move. Spreads, a nice move. If you're trading knockouts at $1 a tick, that's 200 ticks. That's $200 for one contract. Maybe you're doing 1, maybe you're doing 2, maybe you're doing 10. Okay, and that's $200 on one contract. That's $2,000 on 10 contracts. Okay, guys, we can keep going back and back here. Okay, but this is, here's one from the middle of the night, depending on if you're trading there. Here's one towards the end of the day, got you about 50 ticks right at close, but I wouldn't be trading the close. Again, right here at the close. Here's a few nice ones from a few days before that. I mean, there's a nice breakout there. I mean, if it kind of went up and down, but I mean, there's 200 ticks there. What about earlier that literal same day? There's another one there for 1, 2, 3, 4 bars breakout, 200 ticks. Okay. Here you've got another one. Here, what about that one? If you're trading European session, that's pretty clear that that's going to break. That kink has got to let go and burst at some point, right? For 200 ticks. Okay. So I can go on and on here. We can go back and just keep marking these and Xing them, and you'll see the breakouts. Okay. So I don't want to take up too much time here, but does everybody understand that concept of kink and burst? Okay, especially in a volatile market, a lot of people are like, I'm getting whipped, I'm getting whipsawed, it's going here, it's going there, or every time I think to get in, I'm going into chop. I hate chop, I'm scared of chop, I get killed by chop, I hate chop. Well, turn that thinking upside down. And instead of worrying about, am I going to trade into chop, wait until you see the chop, because it's going to happen. In these volatile moves, I mean, look, this was today. This was yesterday. That was the day before. That was the day before. That, here's 3 in one day. You're going to get these trades. And guys, this is one market. Okay. If you're watching multiple markets for these simple setups, there's more than enough trades out there. Okay. Don't be worried that you're going to get into the market, then it's going to kink up. Okay. Wait for it to kink up. And wait for it to kink up enough to know, okay, 1, 2, 3, 4 bars, 5. Okay, pretty soon we're going to have our break. Now I'm looking for my trade. Don't be scared of chop. Don't look at chop as the enemy. Look at it as your friend and look for it as consolidation and accumulation kink waiting for the big break. Okay, and then be ready to trade that. All right, now what are some ways you could trade it? Okay, let's talk about that. So now we've identified it. What are some ways that you could trade it? Well, you do a couple different things. First of all, and I'm going to zoom in here a little bit. There's a couple ways you could trade it. And sometimes it depends on your particular trading style. Some of it would depend on your schedule. Okay. What if you're sitting here, watching this, I'm going to use this one as a example. I just want to find somewhere I can draw real easy here just to give you an example. Let's use this one. Okay. So let's say you're watching this, right? And okay, you've got 4, 5, 6 bars. You're like, okay, hey, that's a kink. It's going to burst. Now, I don't know which way it's going to burst, but I also have to leave, right? I can't sit here and watch this. Well, you could do what some people call a straddle or a strangle, which means you can go both ways, right? So, and don't pay attention to the time frame right now. I'm helping you understand the concept. We have full, complete training courses step-by-step on this. So if you're looking at a big chart and you see this big congestion area, you're expecting a big breakout of, 100, 150, 200 ticks. Okay, well, 200 tick move can be a pretty nice payday potentially on a binary, right? A Nadex binary, out of the money binary, right? Well, what's the one thing we know about binaries? At expiration, a binary is either worth what? Either worth 0 or worth 100, correct? So what if you're in the middle of all this here and you've got to go? You're not going to sit and watch it. Maybe you are going to watch it, whatever. What if you bought a binary because you don't know if it's going to break up or break down, but you expect it to break big, right? So what if you bought an out of the money binary for $20, okay? At the same time, you also sold an out of the money binary for $80. That means you've got $20 risk on each side, correct? So you're risking 20 on the buy side and you're risking 20 on the sell side because you don't know which way it's going to break, but you expect a big break. Okay. And in this case, it breaks way up, 230, 220, 230 ticks. So if your buy side expired profitable in the money, how much would it be worth after this big move up? Well, let's say it was worth $100. Okay. So you paid $20, you risked 20 for it, it's worth 100, so you made $80. So on the buy side, the long side, you're up 80 bucks. Now, your short side lost, obviously. And how much did it lose? Well, you had $20 at risk there, so you lost 20. So you made 80 up on the long side, but you lost 20 over here, so you're up 60 bucks. Does that make sense? So you had a total risk of 20 on the buy side, a risk of 20 on the short side. So your risk was 40. Your profit ended up being 60. So you've got a better than 1-to-1 risk, reward ratio, correct? Everybody follow me there? Because it's a kink. You know that you're expecting a big burst. You just don't know which way it's going to go. So you're getting in low risk on each side. And you can sit there and monitor that, or you could put those on and walk away. Set a take profit, or just let it expire, right? You've got a lot of options there. Okay, everybody follow me? Now, again, for those of you that may not fully understand binaries or the basics, you might be like, wait, that sounds cool, but I don't get it. Okay, well, you can check out, you can check out our website at apexinvesting.com. I'll show you here in a minute. You can get some free education on binaries. You can go to nadex.com and go to their education site, fully understand binaries, how they work, okay? But that is one of the beautiful things about the kink and burst scenario with the breakouts is that pressure building, 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 and then boom. How can you take advantage of it? By going both ways. So you're not having to figure out which way it's going to go, okay? Now I'm going to show you in a minute some ways to look at it and only go one direction. How could you do the same type of setup with a spread or a knockout? Well, if you're familiar with a spread or a knockout, you know that there's basically a floor and a ceiling, a top and a bottom. So let's just say, for example, that you're seeing this, kink here. And you look on Nadex and you've got a knockout or a spread, okay, that has a floor down here, the bottom's down here somewhere, and the ceiling's up here. What that means is if you get in right in here somewhere to go long, if you're wrong and it goes down, the only amount you're losing is from where you get in right here down to this floor. It could shoot down 500 ticks. It doesn't matter. If you bought right in here, your only risk is down to the bottom right there. That makes sense? But if you get in and buy right here and it goes up, 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 you can profit all the way up to the top here, or all the way until you get out or it expires, right? Okay. So in this example here, let's say you were getting in somewhere right in here and you've got about, say a $50 risk, okay? And here the market goes up 200 and something ticks, you're great. Now, at the same time, you're also looking for, literally the same time, you're looking for, again, whether you're trading a spread or a knockout, you're looking for a spread or knockout that has a top here and a bottom down here so that you can go short. So if you're selling short somewhere right in here with about a $50 risk, if it goes up, which it did, well, then this one knocked you out, or this spread lost. You lost about 50 bucks on this short, right? But if you were right and the market went short several hundred ticks, that was profit. Does that make sense? It's the same scenario as a binary where you're seeing this congestion, you're expecting a big break, so you want to go both long and short because you don't know which way it's going to go. So this scenario here, like with a spread or a knockout, you're finding something that has a floor close to the bottom of the range and a ceiling here. So you've got about a $50 risk on each side. Okay. So what does that automatically mean? When you do a straddle or a strangle, it automatically means you are fully expecting to lose one side, right? Because you know that you're expecting a big break. You're not sure which way it's going to go. So you're going to go both ways. So you're fully expecting to lose on one side, but you don't want to lose too much on one side, right? So if you had about a $50 risk on each side, in this scenario here, when it broke out, it went up what? 50 ticks, 100 ticks, 150 ticks, 200 ticks, a little bit more. It's about 220 ticks, okay? Let's just call it 200 ticks. So on the long side here, let's say you got out right there, about that 200 tick. So you profited 200 ticks on your long side, right? Let's say you did a knockout contract. Say you did one contract. 200 ticks is 200 bucks. If you did 10 contracts, that's 2,000 bucks or whatever, okay? So one contract, say you made 200 bucks. But this short here, obviously the market didn't go short. The market went up. So this one's out. You lost $50 on this side. So you made 200 bucks over here, but you lost 50 here. So what are you up? 150 bucks. See that? Okay. So that's an example there. One of my favorite ways to trade volatile markets. When I see these big chops, these big kinks, and I'm expecting a big burst, maybe I don't know which way it's going to go, so I go both ways. Okay? Does that make sense? Okay, I'm going to have to move on now. Like I said, I'll show you where you can get some really in-depth step-by-step training on this, but all you got to do is go back and look at this chart and, look for some of these big, kinks and burst. Kinks and burst. I mean, we went through and marked a bunch and, you saw them. I mean, kinks and burst, some big moves that really add up, okay? So that is one scenario there. Now, I want to show you a quick scenario of, well, that's great going both ways, but what if I do want to try to take it directionally, okay? And again, we've got an entire step-by-step training course on this. So I don't want to overwhelm you here, but let me give you a quick example of how we do it, okay? Don't be overwhelmed by this. This is a quick screenshot from one of our trainings, okay? This is a smaller chart. You can clearly see this is chop, right? Looks a little different. See, on our other big chart, it was just like 5 or 6 big bars, right? When you look at a smaller chart, it's a lot more bars, but you kind of can draw a box around the chop. That makes sense? Okay? How the chop's going to look a little bit different on bigger bars and smaller bars. Once you look down here again at this VAD indicator, volume, accumulation, and distribution, basically what this is this measures the volume of a trend or a push. It's not about the volume of each bar. It measures, like here, for example, down, close, down, close, down, close, down, close, down, close. See these, 1, 2, 3, 4, 5 bars? Well, this is adding up the volume in those bars. Then here you see the up, close bars, and not a whole lot of volume. These down, close bars, and a little bit of volume. Okay, on and on. It measures the push. Well, do you kind of see in this box, in the chop box, look down here at the pushes up, the pushes down, the pushes up. There's not a whole lot of volume in there, right? Notice here as it's coming down, it makes a fake breakout. where it kind of fakes you out. How many of you have traded breakout trades and then you hate them because you get killed by fake breaks? Yeah, exactly. Okay, like, oh, it's breaking out short. Let's go short. Gotcha. Boom, we're going the other way, right? Well, notice on the break short, there wasn't a whole lot of volume coming in compared to this last volume here. Meaning if I'm going to take a short break out of a chop box, I want to see something telling me it's really going. I want to see a lot more volume behind that break than I've seen in other volume pushes in there. If I don't see that, I don't want it. See that? It made a fake breakdown, but didn't show you a lot of extra volume. And then what did it do? It came up, 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 and it actually broke out long from the top of the chop box. You see that? And look right here when it breaks the box. Where is this volume? You see the difference here? This up volume, boom, 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 boom. Much higher than anywhere else in the box. It's a confirmation there of that breakout direction because it's breaking out of that box with volume building and volume exceeding. Make sense? A quick little explanation there. You can kind of see it in a few other examples here. The chop box, and you see here it starts to push, but it never broke. And then here it breaks with the building volume. Okay. Those are just a couple of quick examples there of some ways, and there's 2 or 3 other ways we teach and show you how, okay, when you've established and identified those big kinks, you can either go both ways, or if you want to go just directionally, what's a good way to identify a true breakout? You know, looking at the volume, looking at the momentum, looking at some stuff on order prints, showing a push, because fake breaks are our thing. If you've ever traded breakouts, you know that, right? So how can you avoid those fake breaks in order to take advantage of the true direction? Okay. And you can, again, trade binaries, you can trade spreads, you could trade Nadex knockouts with these kinks and bursts, whether you're going both ways or just one way. Okay. One other way that we also trade Nadex products, we don't really use this. We mainly use knockouts, which used to be called touch brackets. We mainly use knockouts for this. This is what we call Apex Simplicity. It's a proprietary system. We've got these 2 lines here. These are not EMAs. We're not looking for crossovers. These are based on, you know, the IV of options and the VIX and special data feeds. Anyway, it's a real simple system where we're looking for, you know, want to make sure there's no obstructions in the way. We don't want to trade in levels, but we're basically looking for both lines to be pointing down and for the next bar to break a low. Didn't happen here. Right here, both are pointing down. This next bar broke the low, and we're taking it short. And basically what we're doing is this top line here, this is our stop. We're following our stop, okay, and every bar we're moving the stop down until the bar closes above this line. Now here the market popped above it, but it didn't close above it. And it doesn't close above it till right here, right? So we would have taken a short here. This was Monday. This was like 2 days ago, 3 days ago. Taking a short here, and we got out here for, you know, 9.5 points. That's 9 times 4, about 38 ticks, okay? Same thing here. Now they're green. We would have gotten in here. We're following this line here for our stop all the way up to here, about 25 points, about 100 ticks. It's just a little bit different way, okay? Some people prefer, hey, I want to be patient, I want to wait, look for those big breakouts. Other people are like, I really want to trade with the market and go. Notice this was like from 7:50 to 8:30. This was 40 minutes of Monday morning, right? Okay, taking 30-something ticks down, taking 100 ticks up. It's a little faster trading, a little more involved trading. Some people are like, I really want to be a little more active and have a little more action, okay? This is another way that we trade some of the Nadex products. We have this simplicity chart in our live trade room. It's posted right there. People watch it, people trade it. Like I said, I wanted to show you a few different ways that we trade Nadex in these volatile markets. Some of you may prefer one over the other. Here in a minute, I'm going to give you a way you can hop in and check all these out, see what you like. Just want to share, a few different ones. Now, any of these systems or strategies, and there's a million others, they sound good, they look good, but one of the biggest issues, I've talked to people that have traded Nadex and they have a good little system, but they say, you know what, looking back, I can see where my system would have worked. This entry would have been good. This would have been great, but I can't seem to get in on time. Okay, I can't easily and quickly find the best contract. Or, hey, that trade would have worked out great, but I didn't pick the right contract. I should have picked a different one. And this is what I call the Nadex secret weapon, because it doesn't matter what system you use or how great a system is. If you can't properly execute it, and if you can't properly get into that trade in a timely fashion, it doesn't matter, right? If you missed your entry or if you're late. And so I want to show you our Apex scanner, because you can, and I want to give it to you free. Okay, you can use it whether you're demo trading, live trading, no credit card required, nothing like that. It's a free tool because it makes all the difference in your trading. You can see all the available contracts. You don't have to do a bunch of math or calculations and take up your time and get in late. You've got instant entries and exits. You can even do a stop order on the scanner. Okay, stop orders are not available in the Nadex platform. You have to manually exit, right? Well, with the scanner, you can do a stop order. Let me just show you real quick something here. If we go over to let me pull up the Nadex platform. Just want to show you real quick here, because I want you to see the power of why you want to use this. And again, it's completely free. Okay. Let's just say that you see, a big kink in the market, and you want to go trade a binary, and you want to go long and you want to go short. And okay, so I'm going to go to binaries. I'm going to go to indices. Let's say it's the US Tech 100. Okay, let me update this, which is the NASDAQ. You're like, okay, so I need to go long on one side, and I need to go short the other side. So right now in US Tech, I've got binaries that open at 1 p.m., they close at 3 p.m. Then I've got some that opened at 2 p.m. and they close at 4. Then I've got some dailies at 4:15. So let me open the 1 to 3s. Okay, so I'm got $11 here to buy or $54 here to buy. I really want something more like the $20 range, so maybe that's not going to work. So now let me look at the 2 to 4s. Okay, 2 to 4. Now here's a $20, 18. Okay, what does that strike? 11,485. So let me remember that and repeat it to myself. 11,485, 11,485. What's available on the date, or what's available on the dailies? So 11,485 for about 20. This one's 11,488 for about 16. Okay, I guess I'll go ahead and do that one. How much time did that take? And you only got your buy side done if you're doing a strangle, right? Now you got to go back in and say, okay, now what about the sell side? Here at this time, was there anything for about 80? No. Now let me go. By this time, the market might have gone 100 ticks, right? And you guys ever had that situation? Okay. What if you're trading knockouts, okay, or spreads, okay? You're like, okay, well, I want to trade the indices. I want to trade US Tech. Okay, I've got 4 of them here. Now, I want to go long. I want to buy. So let me open up this one. So if I click buy, it says max loss 130, and I could potentially make 470. Okay, what was this other one here? Let me click that one and press buy. Ooh, my risk is 264 on that one. I don't like that. It's too much. What about this one? Buy 370. No, I don't like that one. So I think I'll go back to this one, right? Or you're having to go, okay, wait, what is the market at right now? It's at 11,458. So which one of these is the closest to 11,458? Okay, it's probably that one. Now let me click it again. What was my, you guys know what I'm talking about? It's a lot of back and forth, right? Same with spreads. If you're trying to do that with spreads, it's even harder because you've got all kind of different spreads in here. And under each spread, you've got different ones and you're having to figure it out or click a buy or sell. And what does it tell me my max loss is? Okay, how much room do I have here? What can I profit? Now let me go. It's so much time, right? And you're like, I missed the entry, it's gone. I have a great strategy. It's a great system. Dang it, I just couldn't get in, right? Okay, so what I want you to see is the Apex scanner, okay? The Apex scanner is specifically designed for Nadex here, okay? And let me show it to you. Here's the Nadex scanner, absolutely free, right? I click live account. For example, I have it on euro dollar right now. And say I want binaries, so I click binaries. Boom. In front of me is everything. Here's the contract. Here's the strikes. Right down the middle is the strike. Over here is the buy side. Okay, see, I can buy this strike for $6. I can buy this for $7. Here's the buy side. Here's the strike price. Over here is the sell side. There's the price I can sell them for. Right? Very simple and easy. Look, here's the one expiring at 2:50. That's the 5-minute binaries. Here's the one expiring at 3 o'clock. Here's the one at 4 o'clock. Here's the one at 7 o'clock. I can scroll and see each of them. I don't have to go back and forth. Does that make sense? Okay, I can easily see them. What do I have right here? Well, if I want to buy this one for $12, well, the red is risk, the green is potential profit. Simple. Make sense? Okay. What if I say, all right, I like this strike right here, the 1.1858. Well, I can open a ticket right here and place the order, or I can just hit this little lightning bolt, boom, bam, order in, instant submit, it's there. See that? Now check this out. So I just bought it for $14, right? Okay, so if it gets to $50, I want to take my profit and get out. Well, what can I do? Well, I can go right here and open this ticket. And I can just say, all right, if it gets to 50, get me out. So now there's a working order right there. I bought it 14. If it gets to 50, it's going to sell and get me out for my profit, right? Well, but what if it gets, and this is a bad example, but what if it gets down to $5? Okay, or $1. Again, bad example, right? Because at that price, we would have not even wanted to be in it. Let me show you a quick different example here. I'm sorry. Let's do this one right here. So I'm going to buy this one. So I bought this for 60 bucks. Okay. Now I'm going to open this up and say, hey, if it gets to $92, sell it and give me some profit. So that's waiting, right? Bought it for 60. If it gets for 92, get me out and give me profit. Now right here, I'm going to go to action and say, okay, I bought it for 60. But now I'm going to hit stop trigger price. If it gets down to $20, get me out. I don't want to lose more than that. Boom, done. You see that? So what happened? I bought it at 60. I've got a take profit ready to go at $92. If it goes against me and I'm wrong, get me out if it gets down to 20 bucks. I've got my order, my order is entered, I've got a take profit, and I've got a stop, all done. You guys see that? Just boom, boom, boom. Click, hey, get in, boom. Take profit here, boom. Get me out here, done. See that? It's a great tool here, especially with the stop orders. That's not something that's available on the Nadex platform right now, okay? So I'm just going to get out of this here because that was actually a live account I'm doing this on. I'm going to close these out. So that's binaries. Let me show you something real quick here about the spreads or the touch brackets or the knockouts. So remember on the touch brackets before, like we talked about, where you're like, okay, well, you know, I'm looking at a touch bracket or a knockout, and I'm looking at these, and okay, so this one has a floor and ceiling here, so let me click it. Well, if I bought it, my max loss would be 111. What about this other one? Well, if I bought this, my max loss well, which one do I want? You don't have to do that. Okay, boom, they're right here. See it? Floor and ceiling, that's the contract. Here's the buy side, here's the sell side. Quick little glance. If I want to sell, boom, what's my lowest risk one? Right there, $15 risk, can make 485 max. Boom, what's the next lowest risk one? 113, great. What about the buy side? Boom, that one's a big risk, that one's a big risk. Okay, that's the one I want. I can quickly and easily see exactly what the risk reward is and quickly go, boom, that's the one I want there, boom, that's the one I want there, set my take profit, take my stops. That makes sense, especially on spreads here. Instead of clicking each one, I can just quickly glance. Ooh, if I look to buy a spread, that's my lowest risk one right there, 16 bucks. If I want to sell the spread, here's my lowest risk one right here, because the red is risk, the green is potential. Guys, you see how powerful that is to quickly and easily scan the Nadex products, whether you're looking at binaries, spreads, or touch brackets. And not just have a quick scanner and then have to go back over to Nadex to figure it out. You can enter directly from this platform, okay? Enter it directly, boom. You saw them pop up there, boom. Set your take profit, set your stop, monitor it, instant orders, instant in, instant out. You can do, you know, minimum and maximums. You can do filters. It's a great tool. It's what I consider the secret weapon, because the biggest issue with a lot of Nadex systems is being able to get in time, okay? So that is a special offer that I do want to give to you, and I know that Raleigh here in a second is going to give you, or Pat going to give you that that link, but want to give you a free basic membership to Apex and free access to the scanner. They'll get that link out to you here in just a second. Once you create that and you get to the Apex website, okay, again, you know, you're going to have free access to our site. Just real quick here, I showed you, you know, a couple of those strategies, and I know some of you are wanting to know a little more about them. But basically the link that they're going to give you will take you right here, okay? And you'll be able to sign up, create a free username and password, and you'll be able to log in, okay? Once you log in, just want to show you where to go. Once you log in, you'll be able to go right down here to where it says Nadex scanner page. First thing you need to do right here is activate the scanner. Again, completely free, no credit card, nothing. There's step-by-step training on the scanner. You can log in and use it, okay? For those of you that are interested in learning more about the system here I showed you of utilizing these larger bars, looking for the kink and burst and big breakouts, and some access to, you know, lifetime indicators to be able to do that system, as well as these indicators here. You click here for mastery classes and you look for the binary breakout course, the Nadex breakout course. That makes sense, right? We're looking for those kinks and bursts. It's the breakout course. For those of you who want to hop in our live trade room and trade some of those simplicity trades like I showed you, where we're trailing there, you can go right here to boot camp, sign up free, get 30 days free, no credit card, be in our room, try everything out, and check it all out. So guys, thank you so much. I appreciate the time today that you took out. I appreciate you having us. I know I gave you a lot of info here and showed you a big jet tour. But there you have, you know, next step of where to go. So Raleigh, I'll turn it over. Sorry, I'm long-winded there.
Well, no, John. I said hang in there for a few minutes because there's some questions here, but wow, what a great presentation. So several questions came in here, and I'm just going to try to put some of these things together. But generally speaking, a lot of people really just commented at how much they really enjoyed the way you explain that relationship between, volume and the chop box and how to avoid, that awful false breakout that we have all been subject to. And I think that just kind of leads me to the next point, which is um, I just really thought it was cool the way that you shared. Here's some trading strategies that are kind of simple to use. If you just understand the charts and you pay attention to what's going on with volumes and you take a look at what the indicators are telling you, and then for you to take it the next step and say, and oh, by the way, here's a really slick platform, for placing these trades. And of course, I'm talking about your Apex scanner. So a couple of questions there. John, one went real quickly. With regard to the Apex scanner, obviously that's got to be somehow linked to your account. Does the scanner work with the demo account? With an Apex demo account?
Yes, sir. It works with a live or demo account, and once you access the scanner, you get to choose. I'll pull it over here and show you. And it ties you directly into Nadex directly. None of your account information goes through us. It's the direct API. It's all coming from Nadex. Okay.
Okay.
But you can choose live or demo. Okay.
Well,
So
that's
basically,
terrific.
once you get here, like, let me just show you. I'll log out. So see, when I get to the scanner page here,
Yes.
it tells me right here, you want to go into live? Well, sign into your live. You want to do demo? Sign into your demo. Either one. You can
Wow.
actually be logged into both at the same time, believe it or not. That way, if you're kind of playing with some systems and you want to try some demo trades out, but there's a setup that I want to go live. You just have to flip here from, hey, do you want to see the live or the demo?
That's fantastic.
Demo or live, either one.
That's great. Well, knowing my luck, I'd probably see the greatest trade in the work, and I'd just running around the room screaming, going, "Look how much money I made!" Oh, it's in the demo.
But it was in demo. Exactly. We do that. But hey, at least you have the ability and ease and speed to get into it. That's the
Yes.
first thing. That is so huge. And I know that any of you that have traded Nadex know that it's so huge, like finding the right contract
Right.
or realizing, hey, there was a contract about the same risk and about the same strike. I just didn't see it. And it was an hour or two out. I would have had more time to been right and it would have won. Darn it.
Sure.
You know?
No, I think that's fantastic. And folks, once again, if you just, the links are there and we'll share them all with you. But, Dan Cook from Nadex has provided a link where you can get a free demo account, which gives you access once again to their charts and tools and things of that nature. And what John is sharing with you is here's a free scanner that you can now link to that. So think about your possibilities as you look to get comfortable with Nadex, with the products that are being available. You've got this great suite of tools for you to evaluate if this is the right kind of trading for you. In addition to which, you've had some great strategies shared with you. And once again, John, I just really appreciated the way you took us all step by step through a couple of strategies that you have and how it can help traders avoid the pitfalls associated with a false breakout, how you can use, volume and other things to basically spot trades that make the most amount of sense. And then here's what you have here. So once again, John, thank you so much for your time. You and the team at Apex have, it's no small effort what you've done to create that trading platform. Hundreds, thousands of hours probably went into the development of that.
Oh, yeah.
And it's fully tested and active. So you guys are great. Thank you so much for doing that for us.
Hey, thanks for having us. I appreciate it. Hope this helped, guys, and happy trading. Thank you so much.